coming off a very difficult month for fans of technology stocks, down by about 8%. You can call that a tech wreck of sorts. Brian Bolan is with us, Vice President at Marquee Investment Research. Brian, is it fair to call July a tech wreck for the NASDAQ?
Certainly. It's a tech wreck across a number of different sectors of technology. Intel kind of posting a 60% or just a little bit under that gross margin number, thinking that margins have kind of peaked for them. Kind of the slide took from software into the hardware, and just a general pullback in IT budgets, which kind of constrained the whole industry.
And that's the concern, of course, is IT budgets looking ahead into the calendar third and fourth quarter. What's your outlook, what kind of overall big picture with the universe of stocks that you cover in technology?
Well, in the universe that I cover, we're looking for strong demand to come really out of the consumer market, especially in the security software business. McAfee and Symantec are the two names that I cover right now. I have buys on both of them. They've seen strong growth from the consumer segment and not so much from the corporate or enterprise segment.
Yeah, every time we hear about a new internet virus, that can be good business for those two companies, can it?
Absolutely. That's certainly a reason for the stock to pop, at least in the first 10 or 15 minutes of the day.
You also cover some internet stocks. Anything that you like there?
Well, yeah, we kind of like find what in the internet space,
really?
In the search space. Very good visibility into earnings going forward. And there's been a lot of confusion inside the search space as far as pricing goes, where advertising pricing is going. Yahoo said it was kind of flat in the quarter, but we feel that that was a move to kind of hurt the Google offering, kind of almost in a way to gain share and keep some of those customers away from Google's hands.
I'm glad you mentioned Google, because any concern there as that company comes to public and sells stock that it could draw capital in the market away from some of those other online search stocks like Find What?
Well, certainly. As a portfolio manager would look at the universe, they'd say that there's now another opportunity to buy a top player in the market. There has to be some percentage of a portfolio that what was based, specifically at search would have to migrate into the Google name.
Yeah.
At the price that they're talking about, though, I'm not so sure that I would be the first one to do it.
$135 a share on that top end, right?
Yeah, it's a little rich for me.
What to avoid? What don't you like? What is raising some caution in your portfolio of stocks?
Right now, I think the stocks to avoid, especially on the software security end, are the smaller players. WebSense or WebGuard, SonicWall, things like that. Players that have found a small niche but haven't been able to really dominate that area. I think the bigger companies are really making inroads into the areas that were specifically before just a niche segment of the market. Now you have to be kind of an end-all, be-all provider of security services.
Brian, we appreciate the insight. Thanks so much.
Thanks for having me, Tom.
Brian Bolan is Vice President at Marquee Investment Research.